Rocket Lab is down 46% from its all-time high. And right now, you are deciding if there is a discount or a warning. I went looking for an answer, and I can't believe what I discovered. On July 8, 2026, the market paid $130 billion for Blue Origin. That is a rocket that put a customer's satellite in the wrong orbit, then blew out on its own launch pad. Rocket Lab makes real money, flew a record 21 missions last year without a single failure, and is worth only $48 billion. That is 64% less than the rocket that cannot fly. So, is Rocket Lab a cheap stock right now, or is Blue Origin just overpriced? You need to know which because it decides your return on investment. So, which of these can you actually buy right now at the price that makes sense? Start by crossing two off. Blue Origin you cannot buy at all. It is private. That $130 billion is a number for big investors, not for you. SpaceX you can buy, but you are late. It climbed to $225 a share, then fall back to $145. And even after the drop, the whole company is still worth $1.9 trillion. Here is the part that matters. Future Search, an independent research firm, broke SpaceX into 7 separate businesses and valued each one. Added up, the fair value comes to about $1.25 trillion. PitchBook, a data firm used by big investors, put it between $1.1 trillion and $1.7 trillion. So the most famous name in space is trading well above what the people who study it think it is worth. For me, I would wait for it to fall back toward $1.2 trillion before I touch it. That leaves one door, the proven company launching for real that the market values at $48 billion, while it pays $130 billion for the one that explodes. Rocket Lab is the only one of the 3 you can still buy before its big move, if it has one coming. So the real question is not about Rocket Lab versus SpaceX versus Blue Origin. It is simpler than that. Is Rocket Lab your second chance, or the one you should skip? Rocket Lab was not always this cheap. In late May 2026, it traded at $150 a share. Today, it is near $80. It lost almost half its value, and you need to know why, because the reason changes everything. It was not the business. The business got better the whole time. What Rocket Lab had at $150 was a bonus price sitting on top of the real company. You could not buy SpaceX yet, so investors bought the next base space stock and paid extra for it. I called that the halo in my last video. It was never Rocket Lab's to keep. Then SpaceX went public on June 12, 2026. The moment you could buy the real thing, you stopped overpaying for the stand-in. The halo left, and it took almost $40 billion of Rocket Lab's value with it. So here is the honest half of the answer. The price tag dropped, but the company underneath it did not. The rockets still fly, the customers still pay, only the extra hype price is gone. But Rocket Lab did not sit still and wait to be cheap. In just 17 days, its founder made 3 of the biggest moves in the company's history. Move 1. On June 29, 2026, Rocket Lab agreed to buy a company called Iridium for $8 billion. This is where most people stop reading. So let me show you what Rocket Lab is actually buying, because the satellites are not even the real price. Iridium owns 66 satellites that cover the whole planet, pole to pole, over every ocean and every mountain. But the true price is something called spectrum. Spectrum is the slice of radio airwaves you need to send a signal from space. Think of it like beachfront land. Nobody is making more of it. and you need a government permit to own any. Iridium holds a rare, globally approved slice that keeps working in all weather, even in places where your phone signal dies completely. That is why pilots, ships, soldiers, and emergency crews depend on it. You cannot just build that, you have to buy it. And here's what separates this from a risky bet. Iridium already makes money. Last year, it earned $871 million in revenue and about $495 million in operating profit from 2.55 million paying customers. Rocket Lab put it simply, they are not buying a dream, they are buying a business that already pays. There is one more thing hiding in this deal. Rocket Lab pointed at what the giants are doing. Amazon is pairing with a satellite company called Globalstar. SpaceX paired with one called EchoStar. And now Rocket Lab is pairing with Iridium. The same move by the three biggest names in the game. Rocket Lab just bought its seats at that table. Move 2. To help pay for it, Rocket Lab set up a program to sell up to $3 billion of new stock and lined up a $3.6 billion loan. Move 3. The founder's own trust sold $286 million of his shares in 3 days. Put the first two together and the plan is clear. Rocket Lab is copying SpaceX's exact method. SpaceX pays for its expensive rockets with Starlink, a satellite service that brings in cash every month. Now, Rocket Lab is buying its own version of that. It is trying to become a smaller SpaceX, a company that launches rockets and runs its own satellites for steady income. The man behind this is Peter Beck. If you want to know how he makes decisions, look at 2021. Beck spends years saying Rocket Lab would never build a reusable rocket. He promised to eat his head if he was wrong. Then he changed his mind completely. Let's see what he did after that.
There's a lot of things at Rocket Lab that we said we were going to do that we've done. And a few things at Rocket Lab that we said we would never do, which we have also done. So I really think with this project, it's about time I finally ate the hat. Avoidance of all doubt, this hat is not tasty.
That is who is running this. A man who flips his own heart position when the facts change and commits all the way. He just did it again with the entire company. His words on the Iridium deal. This is our entrance into recovering revenue from space, but not the finish line. Wall Street noticed. Morgan Stanley kept its buy rating and set a target of $105. Its best case is $293. And it used one phrase for what Rocket Lab is becoming, a mini SpaceX. So the company you can actually afford is turning into a small copy of the one you cannot. Is that the second chance you were waiting for, or a company taking on too much at once? I have been holding Rocket Lab since it traded in single digits. Last time it climbed to $80, I sold call options on it to earn income. Then it ran to $150, and I missed that entire climb because those calls meant I had to sell my shares. Now it is back near $80, so I'm selling put options instead, which pay me to agree to buy the shares back. So look at the net result. The stock went from $80 to $150 and back to $80. So the price went nowhere and I still earned income the whole way. If you want me to break down the exact options strategy I use to buy stocks like this for income, tell me in the comments. And if this is useful so far, hit like and subscribe so it can reach the next person who needs to see this. So that is the plan. Buy Iridium, run its satellites for steady income, and become a smaller SpaceX. But there is a problem with it, and it is sitting inside the deal itself. The satellite company Rocket Lab is buying for $8 billion has failed before, badly. The first version of Iridium was built in the 1990s. It cost more than $5 billion to put in the sky. It was going to change the world. Then almost nobody signed up. By 1999, it had about 10,000 customers when it needed millions. On August 13, 1999, Iridium filed for bankruptcy. The satellites that cost $5 billion to build were sold for $25 million. That is 5 cents back for every $10 spent. Now, those same satellites rebuilt over the years are the thing Rocket Lab is paying $8 billion for. So one price tag on the same hardware went from $5 billion dream to a 25 million fire sales to an $8 billion price. That history points in two directions, and I want to be fair to back. It proves satellite service is a brutal business that can bankrupt the people who built it. But it also proves the asset can come back to life and be worth real money. Beck is betting he can run it better than the people who went broke doing it. He might be right. He has been right before. But here is what makes me pause. There is a well-studied pattern in the market. When a company uses its own expensive stock to buy another company, it usually overpays, and its shareholders tend to lose money over the next few years. Rocket Lab's stock is priced very high against its sales, and it is using that stock plus new shares to pay for Iridium. So what decides if $48 million is a gift or a trap? 3 things, and you can watch all of them yourself. First, dilution. That $3 billion of new stock gets old at the market price. The lower the price, the more new shares they must create to raise the same money, and the smaller your slice becomes. So the drop in the stock price quietly makes this part worse. Second, the founder selling. Peter Beck sold $286 million in shares, and that looks scary. But I have to be fair, and the math calms it down. That $286 million was only about 7% of his shares. He still owns more than 40 million shares worth billions, and the sale was set up months in advance on an automatic plan from March 2026 for ordinary reasons like taxes and giving to charity. It is not him panicking, it is a scheduled sale. Now, before you dismiss the whole thing, look at the other side. This is a real growing business. In the first 3 months of 2026, Rocket Lab's revenue was over $200 million, up 64% from the year before. Its order backlog sits at $2.2 billion. And it is chasing a government missile defense program called Golden Dome, worth up to $151 billion. This is not a dying company, it is a fast one. Third, and this is the big one, the real danger is not Rocket Lab at all. It is the whole market turning against risky growth stocks at once. If money rushes out of tech, Rocket Lab falls with it, no matter how well it launches. That is the thing I watch most. The money you would put here is money you are not keeping somewhere else safe. So this choice is really about how much risk you can sleep with. As for me, I'm still holding Rocket Lab at $80, running those same option strategies for income while I wait. Not advice, just what I am doing. So the real question is not about Rocket Lab, it is about you. Can you hold a good company through a bad market? 3 things to watch from here. First, watch for Rocket Lab to name a real launch date for its new Neutron rocket. Until that date exists, you are paying for a promise. Second, watch the Iridium deal. It is set to close in the middle of 2027. If it breaks, the whole mini SpaceX story changes. Third, watch the wider market. If money starts leaving growth stocks as a group, that matters more to your shares than any single launch. Because the strange thing is still sitting here in plain sight. the market put its biggest price tag on the rocket that exploded and its smallest on the one that flies. So when the excitement leaves a stock, are you looking at what you missed or at what finally went on sale? I showed exactly how that hype price built up and left in my last video on RKLB. If you want the full story of the halo, click here to watch it now.